Good morning, everybody. Welcome to the Flow Show. A new week, a new month. All ready to go to war with the markets. And special good morning to Arif. He says he's now a member of the Forex Analytics family, and he's loving the analysis in the chat room. So hope you're taking advantage of that sale, which is now over. If you missed it, it's gone, unfortunately. But you can still get 20% off a subscription if you use my special code FFL20. So use that when signing up to Forex Analytics, and that'll still get you 20% off. That's my special code. That might not last too long either. Anyway, here we are in June, nearly halfway through the year already. Okay, time's flying.
Good morning, Ryan. Good morning, everybody. Welcome, Arif. Time is flying, Ryan. Yeah, and I never believed my parents when they said the older you get, the faster time goes. But I kind of will have to revise my opinion on that because time does fly. The older we get, the faster it goes, mate.
Yeah, and downhill it goes as well. So yeah, very much.
Oh,
Time
no,
is flying.
look at the bright side of things. We are growing through our hair.
Oh, speak for yourself, mate. Let's get cracking. Don't want to get into any hair conversations. They'll be very short conversations anyway. Right, where are we going? Where are we going? Let's give it a my ugly mug first. And as you can see, yes, rid of the hair as well. Right, bit of data to kick off with coming out of Japan. We had some capex data up a nice healthy 6.4% for Q1, blasting expectations of 3.8% expected. Their manufacturing PMI also ticking back up towards the expansion line after a dip last month to 48.7, came in at 49.4. Bank of Japan, according to Nikkei, and it's been confirmed since, have set aside their maximum bond loss provisions. So raised their provisions to 100% for fiscal year 2024. It's the first time they have raised their provisions to full coverage. This is coming in part due to obviously the massive holdings they've got. What they do, for those that don't know, is they basically set aside money for exactly how much they hold of the bond market. Obviously, it doesn't mean those full losses will be realised. They're doing QT as well, which they're going to review at their next meeting. But if they wanted to, they could just let the bonds roll off and suffer no losses. So it's only if active sales will they be losing money on their positions, but they are putting aside their full loss amount, if you like. Okay, is that something we should be concerned about?
Well, well, first of all, if you're a central bank, they've made so much money before, but and it's all paper, right? It's all accounting stuff. But the worrying part of it is that if you put aside, leave all other considerations out of it, but if you put aside money to cover for losses, means that de facto you took your loss and you don't want to stay or accelerate a trade, in such simple words. So that could mean that they are not done, or could be a hint, or them telling us that we're not done with raising rates. We prefer to swallow the pill and move on. Now, the other one, and I think we straight away need to talk about what the government was talking about with all the market participants, and also the Bank of Japan was like talking about that, is they are a bit, or they are closely monitoring that long and super long end. So I still don't rule out that they come in one or the other day and say like we are going to buy a bit of an unscheduled bonds. But yeah, I think it's just the Bank of Japan continuing the path that they are on, and that is, I guess, the message that we can take from all of this.
Yeah, thanks, mate. Covering their own arses, as you might expect. But central banks, do they ever lose money? I don't think so. They always find a way of making money at the end of it. Anyway, there were also some minutes out from this bond market meeting that they had a week or two ago. And the minutes from that said that market participants have been particularly concerned about the significant decline in market liquidity in the super long-term zone. In the medium to long-term zone, supply and demand conditions have been tight. In the super long-term zone, supply and demand conditions deteriorated markedly and interest rates rose significantly. One participant said that the BOJ should amend their plan to accelerate the pace of the taper to improve market functioning as soon as possible. This is all going to be factored into that next June meeting. On the trade front, Economic Minister Akazawa says it's difficult to agree to a deal if the US does not agree to drop all tariffs, including reciprocal and auto tariffs. Japan are busting a gut once again to get the basis of a deal done ahead of the G7 meeting. So they're working flat out to get that done. Whether they do so or not is another question. Bit of data, or plenty of data elsewhere as well. We've had, let's go back to Friday quickly, just German CPI data that was out last week, came in at 2.1% year on year. HICP also coming in at 2.1% on that. We'll look at the rest of the European data that we got today before we go back to the US stuff. So it's PMI day, again, finals for a lot of countries, flashes for some others. Aussie, they're going backwards, 51 versus 51.7. Already spoke about the Japanese one coming into Europe. Spain, this is their first number, not a final number, going into expansion, 50.5. Italy, though, going back a little bit, 49.2. Again, another first number, not a final. Then the finals were from France, which saw a little bit of an improvement to 49.8 from the flash 49.5 and up over last month. Germany, that got worse in the final, 48.3, taking it worse off than last month. Good old Greece coming in there, one nod to still, unchanged over last month. Eurozone number coming in a pip higher, 49.4. Then we had some data out the UK, and you may remember that last month we had a bit of a boomer in the mortgage numbers, that 12.96 billion lift in mortgage lending, which looked a bit strange last month. Touted as a lot of stamp duty running ahead of the stamp duty changes that came in April. So that has completely reversed and more to nearly minus £1 billion from plus 13. Mortgage approvals themselves pulling back to 60,500 there. Consumer credit numbers were higher. Again, that could be a factor of getting new loans in and whatnot. That jumped to just under 1.6 billion. Half of that was credit card spending, which was up from 0.4 billion previously. But so still not numbers that we get too concerned about unless that number keeps growing. Right, rocking it back to Friday's data, and we got the PCE data, and I've seen Powell got one wrong at last.
What a donut! He can't even get a number right. 0.1 difference. Okay,
yeah, he said 2.2.
Sorry,
he said 2.2, and it came in 2.1.
Exactly. I mean, oh my God, we can't be sure of anything anymore.
Yeah, maybe he was watching the show and watching us and thinking, "Oh, I can't be seen to be touting the numbers too often, so I'll get one wrong." So anyway, but that number coming in a pip softer. The core number as well. Excuse me, coming in 2 pips softer though, as expected at 2.5%. In some of the other numbers, the income numbers, consumption and spending were okay. Spending came in at 0.2% as expected. Incomes, though, came in a little bit better, 0.8%. So that's certainly a little bit of a booster for consumers. We also got the advanced good trades balance, which is starting to undo some of that heavy importing that we've seen previously, nearly halving to 87, 88 billion from the 162 previously, certainly missing expectations. So this is still under the cosh, shall we say, of all that front running that we saw previously. Good news for Canada as well. Their first Q1 number coming in annualized at 2.2%, way above the 1.7% previously. And that's going to be some news for the Bank of Canada, who meet this Wednesday. And we're expecting a cut. Well, I say we're expecting a cut. Economist expectations are expecting a cut at 25 pips. Market pricing is the other way, which is a bit strange. You don't often see that divergence, but it's something like 76, 78% probability of them staying on hold. Okay, could be a little bit of an interesting one, the BOC this week.
Yeah, limit border perhaps again, but I'd lean with the market pricing because remember we spoke about it when they cut last time and said like they seem to be hinting at doing the cut and now getting on pause. So I'd rather side with the market this time, where we called it correctly last time. This time I think they will hold.
Yeah, I'm in that same boat as well. But yeah, certainly gives the opportunity for at least some algo-inspired moves on that. If the calendars are still expecting a cut to come Wednesday, but we might see those economist expectations changing. We'll keep an eye on that. We also got the Michigan numbers out, final Michigan numbers for May. Again, a bit of an improvement in these sentiment numbers, whereas we've been seeing them looking pretty shocking over the last few months. Also, the final inflation numbers, big old change around there as well. So originally in the flash, we got a jump from in the 5-year from 4.4 to 4.6. That actually went backwards to 4.2. So we're now actually down on last month. The 1-year numbers not quite back down to last month's numbers, but still undid the big jump to 7.3 that we saw. So a bit of a shift there in those expectations. And now that's the Conference Board and Michigan that's shown a little bit of an improvement in those consumer numbers since we got, well, the latest can kick, shall we say, and the reduction in Chinese tariffs and whatnot. Right, we've had some, we've had a Fed head out overnight. Fed's Waller talking quite dovishly, and that's part of the reason why the dollar's had a bit of a kick in this morning. It says rate cuts remain possible later this year if inflation eases. It says tariffs are likely to create a one-time price shock that the Fed can look through, and that is most focused on market and forecaster expectations for inflation. So he's a bit of a bigwig Waller, and so the market tends to move on his comments more than some of the others. But he's basically saying he will look through any inflation, and if they need to cut, he will be pushing that way. No surprise there. So what we've got going on is a bit of risk off this morning coming in. Waller's comments hitting the dollar as well, but we've also had Trump saying he's going to hike steel tariffs and others to 50% this week. He's picking on China, saying that surprisingly to some, China's totally violated its agreements with the US. So it seems like we've had one step forward in trade talks, and now we've got 2 steps back. Trade Representative Greer says the US is very focused on monitoring China's compliance on trade, and they're very concerned with the non-compliance. It says China's behaviour is completely unacceptable, and China non-compliance on the Geneva deal must be addressed. Obviously, China's been fighting their corner, and an embassy spokesman said China and the US maintained communication over respective concerns in economic and trade fields, whatever that means. The EU is apparently going to impose countermeasures after Trump decided he's going to basically double steel tariffs. And then Trump also said we should get rid of the US debt limit or extend it. We've also had a few, I won't call them big headlines, but headlines talking about China and Taiwan and either are they going to invade and all that sort of stuff. So a bit of a heavy risk off mood this morning, Kay. Is this another storm in a teacup, or are we getting back into all this uncertainty once again?
The problem, I mean, the whole thing altogether is quite worrisome, right? If you take the whole basket, because you add to that the heavy back and forth Russia-Ukraine as well over the weekend, bit of a bloodbath on both sides there. Yeah, it's all. I think the whole thing is worrisome, but then if you pick one after the other, the steel thing, I reckon it's kind of Trump feeling reinvigorated because Nippon Steel and US Steel are getting very close. So now he's putting, he feels strong to put pressure on all the rest. Canada is involved, UK in a way as well. Mexico because of the transit. Yeah, so that's one thing. Whether it'll materialize, it will of course again depend on what the other side will do, say, or put in place. Yeah, but I think the global geopolitical situation is a bit is quite tense right now. Yeah, as I said, the whole thing is it a storm in a teacup? Maybe for risk as such, it may be, but for the dollar, because we are the new month, and we know in a new month we can have this first day of the month moves. Maybe we have to see tomorrow, but the way this dollar trades, I don't have a very good eye on it. It looks like market was waiting that last week, let the month then go by, a lot of uncertainty, and now we have had the weekend, we have had the news, and the market starts to sell dollars. They could have easily bought dollars, but no, the market decides to sell dollars, and again, we will see tomorrow because the first day of the month being a Monday as well, we never know, right? It could be that one reaction, and then we turn that ship around again. But yeah, we're getting close to very interesting levels on some dollar pairs again. Maybe they would go for the break. My overall bias is unchanged, but where we and maybe it's useful to bring it back on in the discussion right now, where we former years saw when there is uncertainty, when there is risk off, the dollar tended to be bought, and now it's getting sold, right? So that I think is the interesting bit.
Yeah, it looks like another risk off US style bout.
Yeah.
But it is. I mean, it's prices opened up pretty flat last night, which was a bit of a surprise. Wake up and then see it all this morning, or how it progressed. It looks like it's just one of too many bricks in the wall, and then they all just toppled over. One of those headlines would have been mildly negative, but when you get, as you say, you got Ukraine, we got the tariffs, we got China, we got Taiwan. It's like when too many things stack up, that's when the market goes, nope, not having that.
And
But yeah,
then you got Waller as well, Ryan.
Waller as well. Yeah, he's another brick in the wall. So yeah, it's all lining up to be dollar negative today. And as you say, first of the month stuff in there as well. So we just have to wait and see whether it continues. But I think Trump doing this tariff stuff is just another thing for investors to go. This, 1 minute we end the week and we're heading towards possible deals and things have calmed down, and then Wallet we come in on a Monday and he's off again, and the uncertainty's there. So this is what we're facing at the moment. You wake up one morning, it's completely different to when you went to bed. But that's markets for you at the moment. We know how they're going to trade. Anyway, we'll have a look at this week because it's a big old week for the data. We've got the ISM later on in the US, as well as the final S&P global manufacturing number there. It's obviously NFP week this week, and it's a double one with the Canadian jobs report too. And with central banks in the mix as well. But anyway, we'll get to that. Tuesday, tomorrow, we've got minutes from the RBA coming out. Then we've got China manufacturing PMI. We got the flash Eurozone inflation number, which is coming ahead of Thursday's ECB. Factory orders jolts from the US. Then on Wednesday, it's all the final services numbers, as well as some new ones from around the grounds. ADP is coming in as well. Bank of Canada coming in. ISM as well from the US. That's the services one. Then Thursday, retail sales out of Italy, and also another China PMI there. Some manufacturing orders from Germany. See if they've got a bit of a pickup as well. I keep saying New Year pickup, but we're halfway through the bloody year. And then we've got the ECB announcement, which I think no one's denying that there's going to be a cut of 25 pips, but it's really going to be about whether they indicate that there might be a pause coming. There's even been a bit of pushback from some of the doves, and they'll have rates at 2% if they cut again at 25 there. And then the rest of Thursday is fairly quiet, and then obviously Friday it's the big jobs number, and the biggest jobs number since the last biggest jobs number. We get to see whether we're going to see any wobbles there, which by and large we shouldn't really, but keep an eye on the ISMs, the employment numbers in the ISMs today, because they can get the market changing expectations for that NFP. Anything apart from the big ones you're looking at, Kay?
It's just a big week, Ryan. We spoke already many times on the flows, on the flow shows. Get every data point will be traded, but there's one thing that, and I know people always look at pictures, want to see technical resistance here, technical support there, but don't forget the fundamentals, okay? I mean, so once we come out of this week, take everything or put everything, note everything down, see where it was, and then have a look at the global picture. I think this week could be a pretty big one, especially that we are relatively close to important levels. Once we get out of this week, there may be a new trend developing if we break those levels, if they are sustainable. Just have a look at everything that goes on, because I think everything will be important in itself, but the whole picture will be extremely important as well. I would argue. Yeah, the ECB, mate. It's that's a funny one, because okay, until what is it? A week ago was a no-brainer, right? The 25 BPs, and then see what happens. But gradually, the Hawks and the Doves are getting kind of on the cautionary path, and yeah, I think there may be that 25. It's rare that the ECB goes completely against market expectations, but I think there may be a clear decision on a pause coming there.
Yeah, absolutely. But as we know, there's multiple opinions for that. If you take the likes of Villeroy, who's still pumping for more cuts.
Yeah.
Why is he pumping for more cuts? Because he's the French central bank head, and their economy is pretty much very, very weak. Even the PMI today, in the comments, saying that firms are cost cutting even more, or cutting output costs even more to try and gain new business. So that shows a weakness there. Hence why he wants more cuts, because their inflation is well sub 2%. But not all countries are on the same level. So you're going to have the Hawks and the Doves. But yeah, I think a cut, and then there's two reasons. One, because this is a forecast meeting as well. So they all, as we know from all their comments, we will make our choices based on the new forecasts. I doubt they're going to be very bullish. So that will indicate why they need to cut this month. But then, yeah, I think rates at 2%, all this uncertainty, there is a strong chance that they then decide to pause maybe until September. and take it a bit slower now that rates are at 2%, round about neutral rate as well. So yeah, tons of data, and I think for trading it this week, you've got to identify what mood the market is in. Okay, today the market is very bearish risk, very bearish the dollar. Okay, so any good data is likely to be sold into pretty heavily. Of course, if the data's bad, that's just going to be more fire, more petrol on the fire, and you're going to see the dollar get hammered. So know what the market is doing going into all this data day to day. Okay, we could get some headlines. Trump's not going to do 50%. China's going to play nicely, deals, whatever, and we get the light switch and everything's good and funky. And then the data is going to have a different complexion. If we get bad data, that's going to be a dip that everyone will buy. So today, I'm looking at the data this way, that the dollar's in the doldrums, and any bad data is going to see a bigger reaction than good data. So just, as I say, play it day by day and know what the market's doing going in. Right, speaking of the market, let's have a look at what's going on. I'm going to start with dollar yen, which is getting really crunched at the moment. We've carved through all the levels. We had a bit of a solid bottom on Friday at this 143.40. But that got smashed out overnight. We carved through a little smaller level in the 20s. We're now under 143s. Really, the big level is still this 142 level, which is, if it's not too messy, which is a long time level that had a say in all these big moves that we've seen over the last few years. We had these pokes through, so you can't rule it out, but it's a level of interest, shall we say. But if the dollar's getting us smacked around today, there's a good chance we could even go through that level as well. So that's the one to keep an eye on for now. Bounces, as I said, if we get some decent data, but the market's still in a bad mood, then these levels, 20s, 40s, up into 144s, are going to be the levels to watch on the way back up. And if we can't get through there, it's going to at least keep this turn going. And then we are maybe heading a bit lower. Kay, I wanted to ask you about Aussie dollar. Got another rally above the 64.40s. It's ticking above this sort of intermediate 80s level, but again, unless it's holding 65, 65.10, you've got to be cautious.
Yeah, it was helped as well with, well, obviously the global dollar sell-off, but then as well with higher copper and stuff. We are actually trading in a decent little range, decent little channel there that I've been watching for the past week and trading off as well last night as well. And yeah, those month-end flows, they have been a bit mixed. We did see the last leg, really the last 10-15 minutes dollar sales, but before that we had a bit of the other side, which just looking at what Ali put there, I told you as well that metals have a month-end flows, but all those month-end flows, they can throw things a bit up in the air. But the good thing about the Aussie is that we held that shorter term channel, and it is a pretty decent trade. But again, how many times have we already said that we are going to need to clear that 65.15 to then continue to move? And that's where I said a bit earlier, I mean, we are at interesting levels and or close to interesting levels. Being the first of the month, knowing what's going to happen, are we ready to break them this time? And that's the rest of the week that will probably tell us. Yeah, but it is still positive, but it's a slow-ish. Well, it's a bumpy ride. Let's call it that way, because you do the 40-50 points, which could be which is 0.5% or more even move in a day. But yeah, it is still, if you look at it overall, for the bulls, we are going to need to break that 65 figure 15.
Yeah, thanks, mate. And yeah, I agree with that 100%. Ali, you've got to be careful next month, or the end of this month, I should say, because it's going to be quarter end, Q2 end, and first half year end. So H1 end, which can be one of the bigger month ends that we get when you get the half year end and the full year ends. So it's going to be a bigger one because a lot of people do they mark their half year reports. They want their half year reports. They can book some profits, funds and whatever, just to update those reports and take stock, and also do a lot of rebalancing. But it's you can't just stop trading it, but you have to acknowledge what flows might be coming through, and you have to watch the clock, and you have to be aware of it. So, if you see some moves happening on the hour, then you know what it is, and you can sort of maybe manage your trades around it. But all part and parcel of trading this stuff. Right, I want to show you something from Friday's show, because I said this could be very significant if we get a move down here in dollar mex and what might happen thereafter. This is a pattern I've shown you time and time again. I'll flick it back to dollar yen because we had it here at the 142s. This pattern, hit the lows, break, find support again, and then you get big moves. So this is what I was looking for as a possibility on Friday in dollar mex, and we got it. Unfortunately, I didn't get a trade on. I was bid 19.25 and a half, unfortunately, so I didn't get any fill, but a decent jump in this one, dollar mex. So keep an eye on these sorts of patterns. Okay, some people will be looking at this as maybe a inverse head and shoulders. Okay, and they'll be waiting for maybe, I don't know where the neckline is. I'm not a aficionado, but I always say that's not really the trade. That is a possible trade, the break of a neckline on the head and shoulders. But if you get this sort of pattern, you can get in much earlier than that. Okay, so this one played out on the text. So I hope some of you took it. But if not, this is what you need to look for. And it happens on the reverse side as well, where you get a high, break the high, come back under, and then you hold that first level again. So this is a pattern that you should have in your armory. In the meantime, I said we could have a significant rally. We got up to this 41, 42s. Can't get a hold. Let me get rid of that actually while we're here so it's clearer. Can't break and hold above this level though. So now we've seen a bit of a pullback. 1930s is going to be the important number. If we get back here though, okay, if you were looking at this and you missed it on Friday, I would be more cautious taking it again, because this would be a quick return to this level, which, if you follow the patterns, might indicate or raise the potential for a break of that level. The fact if we come down here that quickly, so I wouldn't be as keen to try that trade again. That was the one I was looking for, which would have been nice pips that way. So if we do come back, there's a higher chance that we may break that level, and then we may be down to testing these lows again. Dollar China I want to show quickly as well, because it's okay. This one's not as volatile as you might have thought, given what we're seeing in risk this morning. So it smells like they're probably doing a bit of smoothing in there somewhere, as they have been all the way through. But levels wise, this is really a bit of a doorway to some of these higher 720s, 730s area. What are you making of this one? I've been waiting for a lower move to maybe try it, but it's not quite come yet.
I think we're just stuck, Ryan. I think we're just stuck for now and waiting for a clear a clear message from, and I would say particularly China. We heard over the weekend, Bessent again saying that he thinks he's going to talk to China G, or Trump going to talk to China G. The US is just desperate to get G on the phone, and G says, "Well, sort your stuff out first, and then I'll talk to you." And that's where we are right now. I'm not going to read much in these moves that we see now. Yeah, we had a bit of a move there, but we're a bit stuck here, and I fail to see where we are going next, you know. I'd rather have the top and bottoms break instead of like thinking that this is some important level around here. And we are just turning around. Yes, it's a bit of a pivot, a bit of a hinge, but I'm very uninspired in dollar China right now.
Yeah, this is more just for watching purposes. I wouldn't be interested really in trading in the middle here, but maybe if you get a move down low sevens, maybe back into these sort of highs, I might have a look just to see if the range plays out. But yeah, I thought this might be giving a bit more of a clue this morning, but it's not, which is a clue in itself. Derej, yeah, quick look at Euro Sterling, and I'll bang it on to Mr. K. So I'm still in a short from Friday. You still in yours, mate?
Nah, nah.
You're out, are you? Yeah,
Yeah, I played a bit of ping pong. Was lucky to get some in those low 84s, and then cut the rest today, just because I've got enough of the rest. And then looking at that, it's just like up and down, and can't really, I can't really. Yes, the levels are there, obviously. Yeah, 84.60, 84.50. But I can't find anything to keep me in a trade that I have enough uncertainty on the euro, let's say right now, and this is funny because usually I don't trust the euro at all, but I have enough uncertainty on the euro right now not to keep the position, despite we are in the middle of the range there.
yeah. I'm thinking I might turf mine out if I see this 30 holding now the support. I think I'll chuck mine out. But
Mm.
yeah, this one was a bit of an end of month trade when we saw this big move. I
I
didn't
thought
do
so.
anything. Yeah, I
I
didn't do
thought so.
anything down here. I thought we were going back after we got this move down to 84, but that hold is definitely not a bearish sign. That's what we need to get under to turn this around. I think though this is still a bit of that speed move between euro and cable rather than everything's fine and dandy in the eurozone. For once, euro seems to be moving quicker than elsewhere, but in trade problems, it's the bigger block that investors are going to move to. So that's one reason. Yeah. So Derez, I don't know what you're looking at, but
Uh,
it's looking well supported. This is looking like a bit of a short term fake out, and then we're
yeah.
back holding this level.
For me, it can be at 84.60 or 84 to figure, and without anything changing.
Yeah.
Right now. And yeah, I thought actually on Friday, I actually, but for a very quick move, sold a bit more, and then it didn't, because I thought it was like a fixing combined with the MSCI reweighting, buyers of euro sterling for the end of the month, and then we fizzle out. But since it doesn't do anything today, I just give up because I don't know. For me, it can be 30 points lower or 30 higher without really changing much to anything.
Yeah. Exactly. Right. I'm going to pump it over to you, mate.
Cheers. Yeah.
There we go.
Okay. Right. Okay. Um, Go. You put up the chat again in case somebody tells something. Right. So, yeah, that was a bit of a naughty one on Friday, right? As I said, but again, I said it. We warned about it that there can be like month end stuff going on metals. That was this little dump before the actual real end of month also came in, and now we are seeing this move post weekend. This is the thing. Post weekend, you can't really foresee what all those headlines and but of course we scoff. Been saying it so often. Gold is one now, one of the most clear expressions of people don't liking something, or people don't liking much of what's going on, and this is what we see now. And we see the break of this triangle. I'd still say it is a positive break, especially that we held roughly through mountain those levels here. We didn't go down to the bigger support intra triangle. This is positive, but I'd still say that we need to confirm through 33.70.85, and then there's probably going to be another push. Um, just one thing, because we know that the Chinese or Asia is extremely active in all things gold and stuff. China was close to there. They have their Dragon Boat Festival over there, so China was officially closed, so they haven't been part of this move. So the interesting move will be next night coming, unless we break through it during the US zone, which would be quite significant. I would say as well. In the meantime, I'd say still watch this zone here, because I'm rather looking for confirmation through there. And then go for a walk higher. Similar happening on silver. Bit of a triangle here as well, broken again, but we are back below. As I said, it is following gold in the distance, but this needs positive news. And when you say there is not much of positive news, you see the in sympathy with a lower dollar move, but then it's coming back down, okay, a bit faster than gold is coming back down. And here as well, there's this secondary level that we need to break above, and I've been talking about that 33.65.70. For as long as that doesn't break, I don't think that we need to start looking for a straight move up back into the 34 and a half. And who knows, if that breaks, then we are potentially going to move much higher. But I am going to, well, I'm sitting in my long-term longs, but I am going to wait for a confirmation of this break to step in again, because in the meantime we can easily do those same kind of moves again that we have done before. Um, it has got a gap. Oh, okay. No, I'm not. I'm not. I'm sorry, but I'm not trading gaps. That's not something I've ever looked at, and I'm not going to start with it right now. I'm getting too old for that. Cable had a bit of a run up in sympathy with all the other dollar pairs, and but we stopped at the 78.6 of this setback. So keep an eye on that. 135, 50, 55. Okay, so we stopped right there. Interesting enough, but it is still overall holding those setbacks. This again was that move that we had on Friday, month and et cetera, et cetera. But we're still holding above the critical levels, all right? So I would still argue this is positive, negative dollars, but this is still overall positive. I would allow perhaps for a bit of retracement before the US walks in, perhaps 135.20, 135 the figure, perhaps going back there, and then see what the US wants to do with their own currency when they will walk in. Okay, I do think it is still positive. Worth watching the longer term, because as I said, okay, it's a bit messy on the chart, but there is a big zone here waiting, and that is 137.35, 137.75. Okay, if that 136 goes and holds, I think we are going to be very, very rapidly into that 37 level. Okay, my overall bias still unchanged. I'm still looking at it positively. I'm trading it that way, but we need confirmation. Okay, and confirmation levels is what we need on a lot of currencies. We've spoken about this 65 figure 15 in the Aussie dollar. Look at the Kiwi. We are there as well. Okay, very close with 20 pips away. 60-30, 60-40. Okay, if it goes through 60-40, I've got the impression we may be off to the races. That means the global dollar picture remains very weak. Could be having to wait until we see the ISM services, until we, even for the end of the week, the US the US jobs report, but it needs confirmation, and this is what we often say. Like, look at those levels. It is. I'm a bit long of it, but I have taken some off because I need confirmation through those levels. Okay, to really go full, maybe full steam, or maybe not even. But I've got a few currencies on, but I need confirmation. So for as long as I don't get that confirmation, I'm going to do exactly the same as I usually do. Have the position, take some off, and then wait to see whether we can break or not. All right. Yeah, Bran, buy dips on the cable. Yeah, I think it's still because the bias on the dollar is still there. We had a bit of uncertainty last week. We had those setbacks, and then we see now we are now. If you just talk about the cable, we are 60, 70 pips away from that prior high, which it's not breaking, but we are moving back up. Okay, so your price action is there, same as in most of the currencies. There's one that we need to. Whoops, what is it? The leap has just started. Wow. One that we need to keep an eye on this week, and because we have Bank of Canada, and the Canadian dollar is doing better. All right. And we are now in a test mode of that underside of that big zone. You know, we um, um, went up even through that first resistance 139.40s, went up to 140, and we couldn't get it. And now we came back, held it around 138 and a bit, but now we are firmly through, and we are testing and even trading a little bit under now. It's trading under 137, the dollar Canada. We could be in for a break here. All right, we could be in for a break, which could lead us then to 134 and a quarter. We still have the Bank of Canada to come. They can surprise us, but the way it trades right now, this is looking breaky, and I'm a little surprised. Okay, I mean the dollar is weak, but in a certain way, I'm a little surprised that we break it straight away, because those still the threat of putting 50% or so on steel tariffs. They do import a lot from Canada in the US, and I would have thought that that would not have been too positive for the Canadian dollar. But it is, the market shrugs it off completely, and we are potentially here in a break. Okay, so 137.10, 137.35. Look at that zone. What we are going to do in if we get a little bit of a bounce and we're starting to cap, we may be in for a break. And that's the one. Mark, yeah, but Mark, you're in our room. Yeah, we can take a look at the S&P, but I'm going to tell you honestly, we banged our head against the a bit of a resistance here. It is trading a bit weaker, but we have seen these kind of setbacks in the past as well, and then the jump. So, are we going to confirm a risk-off scenario where the market is again not trusting anything that happens in the US? We could break back below 58.45, 55, and go back into the 57s, 58 and a half-ish around this. Probably your intraday level that you need to watch there, Mark. I'm not going to say too much more about it. Bigger support is going to be around here, but yeah, I'm not overly tempted to do anything right now because we are seeing we had this big recovery, and now we are seeing a bit up and down. I'd say the big one is going to be 6,057, 70, 90. That's your range. If it breaks one of those two levels, then I think we are seeing a bigger move. Okay, that's it. No, Dimi, I'm not trading platinum at all. Are you in our chat room, Dim? Are you in our community, Dimi? Because we can always ask Tel. He's always watching platinum very closely. With that, Ryan, I'm going to give it back to you, mate.
Thank you very much, mate. Good stuff as always. And yeah, any other questions, if you're in a chat room, then feel free to lob them up. If we don't know it, someone else will. So come and shoot us a message in there. Have a great day, everybody. Have a great week. Thanks for coming to the Flow Show. We'll see you all tomorrow.